I want to move on to a smoking hot trend in the ETF space. We like talking about hot trends here, and that's pot, cannabis business. The pot space is growing like a weed. A handful of new ETFs, including the Amplify Seymour Cannabis ETF. The ticker's CNBS. Get it? Launched just last week. Now Tim is the portfolio manager of CNBS. What a coincidence. He was just walking by.
Right here.
We should note, stocks in the ETF must be legal in the countries in which they operate for disclosure purposes. All of the components are listed on our website. I sound like a lawyer, don't I? Tim, tell us about this ETF.
Well, look, the proliferation of ETFs, I think the key, let's cut right to it. You need to understand what you're investing in. You need to understand, is this a pure play on the sector? So 80% of our portfolio has to be companies that have more than 50% of their revenues from cannabis. If you look at other ETFs in the space, they're not that pure. This is an actively managed strategy, which means I'm someone that's been investing in the cannabis space for 4 years. I'm an emerging markets investor. Bob, this is a new asset class. We've seen some of this before.
Do you think it's like emerging markets, that it's going to be that rough and ready, that there's going to be some big winners and there's going to be some bad apples? That's what emerging markets happen.
Look, we've seen in the last 2 weeks, I mean, a company like CanTrust, which is not in our portfolio because it's very active, has had major corporate governance blow-ups, and it's a lot of people have been caught holding the bag. Corporate governance and companies, how they execute in an uber-sensitive regulatory environment, I think that's part of my job as the portfolio manager every day.
All right, Todd, I get that it's a hot space. Remember, we were doing this with Bitcoin 4 years ago. We do it a little bit with esports, too. We understand that. But do we need 5 pot ETFs?
Well,
5.
And that 6th one is coming as well. But so we really saw investors gravitate towards MJ, which is an ETMFG product that backed its way into the cannabis space, gathered $1 billion relatively quickly. Other providers have looked to capitalize on that. It tends to be a very popular theme.
So it's not lost when you can get $1 billion. It attracts other players.
Bob,
it does.
I don't think it's as simple as that. And again, the industry, the first 2, 3, 6, 1 year way to play this was to buy 1 or 2 stocks and have a top-down call. Using the same metaphor as emerging markets, we want to have exposure to companies that are not only the most thoughtful portfolio today, but I'm out there looking and scouring the leading edge of what's supposed to be in that portfolio tomorrow by talking to these companies, by meeting with them regularly.
So there's themes here, it strikes me.
Sure.
There's the people who are growing it, but then there's hardware suppliers. I mean, can you silo it this way?
We have 3 kind of distinct sleeves. One is the plant and cultivation, whether it's hemp or cannabis, so whether it's the non-psychotropic part of the investment landscape, and we know that CBD has also become this huge story since the FDA and the Farm Bill came and made hemp CBD legal. But the second would be ancillary, which would be financial services, REITs, ways to actually invest for support for the system. And then finally, third would be technology. So whether it's ag processing, whether it's technology, in the same way we're seeing marketplaces that are being created in other consumer products, other technology, direct to consumer. What's so exciting about this sector right now is all of these verticals are shaping up at a time where an industry is coming out of prohibition.
Is CBD, how do I say this gently, overrated? I expect it to show up in butter, in household cleaning products next. It's a little, it's a little over the top at this point.
I think there's the 2 comments I would say is, one, the FDA has a job to protect folks from food additives and supplements, and frankly, I think they're doing a very good job. I think CBD has proven efficacy, whether it is for 80% of the OTC ailments you walk into CVS for, whether it's a sleep aid, whether it's an anti-anxiety aid, whether it's some type of a muscle relaxant or painkiller, those are things that it is working for, but everybody and their brother has gotten worked up over CBD.
Todd?
So there's 5 of these ETFs that are out there, and Tim's fund is actively managed. It invests in Canada. There's MJ, which we mentioned earlier, which is index-based. You've got a fund that is investing in the U.S. using derivatives. So it is important, if you are taking a look at this space, to understand what's inside the portfolio, what is not inside the portfolio.
A key point is that almost everything here is Canadian, right? For the most part, you're dealing with Canadian companies right now. Do you foresee a time when a U.S.-based pot company will be publicly traded?
Look, last week we had the Senate banking hearings where the SAFE Act and the States Act, which are effectively regulations, which will make U.S. companies operating legally in states that are permissible right now to be able to be banked. And so ultimately what's happening is U.S. companies are working at a disadvantage to their global peers, certainly their Canadian ones, because of these dynamics.
Give me a date. Do you think this is going to happen?
I think this is going to happen within 6 months.
6 months.
And I think right now our portfolio...
A U.S.-based cannabis company will be active within 6 months.
That which is involved in THC or the psychotropic, federally illegal. And look, until that's there, Bob, though, I'm not going to invest in companies that my investors are concerned about. I think we're supposed to be the safe pair of hands.
Are there some sketchy companies out there, some marginal players?
There are, but there's some great companies, and I think it's an industry that largely is held to a higher standard because of the dynamics at work. But I think that's our job.